Hi everyone, how's it going? This is Gersher from Technical Option Traders Inc. Hope you guys are having a great day. So let's talk about S&P 500 and what's been going on over here, right? So if you guys can see, S&P 500 overall is in a strong downtrend, okay? So market is starting to reverse on the S&P 500, and S&P 500 is struggling to making new highs. It is actually making new lows, okay? So if we look at SPY overall and we analyze what's been going on here with price action, if we look at the volume, the 1, 2, 3, the 3 days of green days that we have had, unfortunately, the volume is declining. Okay, so if we are actually thinking that buyers are going to come here and they're going to step up to the plate and they're going to push this market and reverse it, it does not look like that's the case right now. It looks like the overall volume is starting to decline. However, the next few days will be important to determine which way we go. So this is why currently I'm not holding any long positions currently, or short positions. So I on the S&P 500 is something to completely avoid if I was you, right? So if you guys are not in anything, just completely avoid it. Let the market give you some direction, okay? So S&P 500, first of all, what it needs to do here, if it wants to go up, it needs to consolidate between ranges, then slowly break out, and then consolidate, then break out again, right? So, and also we do need to see some buyers here. If it wants to break down, it will try to bounce up here aggressively, go vertical, possibly reject, and then come to the downside here. And that could happen as well. Now, we do have Jerome Powell speaking tomorrow morning. So this could be, he could give some sort of statement which can cause the market either to break out or break down. Right. So now with there's a huge thing about a wheat export ban from India, and also a ban. So also we are struggling to get wheat from Ukraine and Russia, for obvious reasons, which is causing a strain now in the food sector as well. So we already have inflation in all other sectors. There was already inflation in the food sector. Now the wheat ban from India has caused a little bit more stress on the food sector as well. So especially with wheat. So something to keep an eye on with rising inflation, and interest rates are going to have to be a focus for us going forward, right? How they do, how are the yields, what is happening with the market. We can get aggressive sell-offs towards end of days. This is very, very normal. Something that we do want to pay attention to, and we want to pay attention to levels. Okay, so if the S&P 500 is going to break down from here, what we're going to see is we're going to see a breakdown of 394. Then a break of 385, then a push to 376. Okay, so however, we do need volume to step in. Right now, volume, I would say the scales are a little bit balanced right now, so it's neutral. This could be due to the fact there was increased volatility, and we do need a volatility crunch to come in and just help with the market overall. Okay, so that's something that we do want to keep in mind, and we want to pay attention to that. So the triple Qs overall here. The triple Qs are breaking down, today. They are red, 1.9% compared to the S&P. So Qs are not having the greatest day. It looks like they want to reverse here to the downside. However, we want to keep a watch here. So if Qs can get above the 311, we can push to 324 or 325. If they break down below 297 and close below it over the next few days, there's a gap here which could be filled, and we can break down to 284. So that's something to keep an eye on the Qs, and makes sense. The tech sector is struggling a little bit, and if we look at the 1 hour time frame and we break down, we can start to see a consolidation. And if we can see the triple Qs here, we can see this is a critical level at 305. We can go to 311, and below that, the critical level here is at 285. Okay, so that's something to keep an eye on to see which way we go and which way we break out. Let the level and price rise. As you guys can see, the volume is declining, so there's lack of participation, which is lack of liquidity. If there's a lack of liquidity, it's harder for us to get in and get out. Okay, so remember, keep that in mind. Okay, so we'll see what happens overall with the triple Q over the next coming days. Now let's look at Dow Jones here. So let's look at this. So Dow Jones, right? So Dow Jones, overall, if we look at a daily time frame here, it's breaking down here. It tried to break down and then push above, unable to get there. What I'm interested in, okay, in the Dow Jones, these are long wicks, top and bottom. Okay, so right here, these are crazy long. Okay, so because of these long wicks, we want to avoid this. Okay, so there's uncertainty and there's volatility. We want to avoid all of this. We want to wait for clarity. Okay, As you guys can see, like these a big price action with decreasing volume. Stay away. Do not touch this. This is highly volatile, low liquidity. Your fills are going to be bad. There's going to be high chances of slippage. Just stay away. Let it form. Let it do its thing, and let it calm down a little bit. So let's look at IWM. IWM is consolidating in this big range right here. After making a huge move with rising volume, now it needs to take a breather, which is what it's doing. It's below the 185 mark, which is absolutely amazing for downside players, so people who are short on the IWM. As long as it consolidates here, it can break down towards 170. After 170, if that level breaks, we're looking at a gap fill and a push to 165 on IWM. If we look at the 1 hour time frame here, right, consolidation going on heavy here. And what I'm looking at is if it breaks above 179, we can get a push above to 181 and 182. Okay, that's something to keep in mind of, guys. This is very, very light, and that's something we want to keep an eye on. Okay, give me 1 second. And then VIX. VIX is consolidating here. Okay, so VIX is trying to bounce up here. If it breaks down to 23, we can go down to about if it breaks down to 23, that's a positive sign. But what this looks like to me is a volatility crunch more than anything else. It's not a complete breakdown of VIX just yet. It's still in this consolidation range between 23 and 27. Okay, so if it still holds at 23 and decides to bounce from here, that's not really a good sign. If it breaks the 23 and it goes down from here, that's actually a positive sign that volatility has been decreased, fears decreasing, and we can possibly start to go back up again. So however, be careful, wait for the closes to happen below 23.75, and we can get to 20. I want to see VIX below 20 before I start thinking of any long positions overall in the market, right? So that's the idea on the VIX here. Looking at gold, gold is trying to bounce today. Nice day, a reversal, but once again, not really phased by it. It is in this big range between 172 and 163, and it's below this trend line. So we need gold buyers to come in, like they did right over here, and to start pushing gold above the 173 and then the 174 mark. If it can get above that, we can start to see gold rise. But on the 1 hour time frame or the intraday time frame, the downwards trend is still very, very dominant. And we can see the price, it needs to get above this zone right here, 172, to get to 176 before we can start considering any kind of long positions on gold. Okay, so that's something to keep in mind of right now. On ARK is just a complete failure here. Just reversing it's just volatile. It's volatile, really, really volatile in this range, right? It's really just trying to break out and break down all at once. It doesn't know which way to go. This is what happens when you get a highly volatile environment. Before volatility settles and the real move happens. So I think we will see that happen in the next couple of days. If we break below 34, we're looking at going to levels that were seen in 2017 or 2016. So which is about 30. So this is a big reversal on ARK. Okay, so the other thing we want to pay attention to is KWeb. KWeb, it's holding this trend line actually, so which is not bad, which is what I like to see here. So these stocks are starting to bounce, and KWeb is trying to bounce here as well. However, this down trend line is still dominant, and it's still holding its share, lion's share of the down move. So I want to see price action get above maybe 29 and then push to about 33. If it can do that, we can get a push to about 39 to 40, which will be really good for some of these stocks and to get some relief pressure on KWeb, right? So overall, crazy day in the market, very volatile. I will stay away from it and just take it easy, and we'll see what happens in the next coming days, and just to kind of get a direction. Okay, so be safe, guys. If you guys like what I do, please like, subscribe to the channel. I'll see you guys tomorrow.